Hello everyone, welcome to this live intraday strategy webinar. Today is Tuesday, October 6th, and I'm Michael Boutros. Good to be with you guys this morning. So, lots to cover. Mostly the Aussie pairs have been what is sort of been in focus on the back of yesterday's RBA interest rate decision. They left interest rates unchanged at 2% as expected. Some interesting comments, but nothing to really shift expectations from the RBA moving forward. They noted that inflation is consistent with the target over the next 1 to 2 years. They said that economic conditions and financial conditions are to inform the policy stance. Monetary policy needs to be accommodative. It's all fluff, guys. Nothing really here that was sort of jumping out at the market. So the result did keep our topside bias in the Aussie in play, and we'll go over those pairs in just a moment. But before we do, as always, questions, trade setups, anything that you guys have, do feel free to throw them on the message board. Good morning, Bernard. You know what? As soon as I ended that webinar on Daily FX yesterday, I completely forgot that you asked for the DAX. So we'll definitely take a look at that today, man. Remind me. Dale, good morning. Mario, Eileen, always a pleasure. Merdad, always good to see you as well. So before we get started, like I said, a quick look at the relative performance for the greenback looks like this. You see most of the major counterparts are stronger. Aussie's top performer today up 0.42%. Euro with a nice rally up 0.37%. Yen kind of lackluster. That's not expected to do much. You have the Bank of Japan on tap tonight. Kiwi almost unchanged, and a slight decline here in the loonie, pushing dollar CAD higher. But the broader focus for the dollar CAD still remains weighted to the downside below that support structure we broke earlier in the week. So we'll take a look at those. First things first, let's go ahead and jump into the radar charts from yesterday. Aussie dollar was first thing on tap. Here's what we look like yesterday, heading into the interest rate decision. Tried to give you as many updates as I could on that. The basic premise, again, was for us to be holding within the confines of this structure, okay? And you saw that, that's Aussie Yen, sorry about that. Here's Aussie dollar. You saw that we highlighted that confluence region at 70.66, and that was sort of the focus of what we were looking for as we came into the interest rate decision. That's sort of exactly where we pulled back off right before the release. So there's a couple of median lines here that I added. I just wanted to clarify because I had a chart on this on Tuesday. This is the one that we've been working with since Tuesday. You saw that break there. We got a little bit of a penetration over yesterday. There's another median line now that we've made this advance that also caught that high. And this one's just off the low from last week. So again, these session breaks here that you see are weekly closes or weekly opens rather. And if we take it just from last week's low, last week's high, and the Friday low, you can see that that's guiding price action pretty darn nicely. Okay, so both of these median lines confluence right here, right now, and that's right around 70.90, 70.88. That's going to be the new bullish invalidation level. Okay, so if we get a dip into here, we'll be looking for topside triggers. If we don't get it, expect to drop into the lower median line parallel. That being said, subsequent topside objective that we missed yesterday on this stretch, or that we missed last night on this stretch on the RBA, is right here at 71.47, 71.49. I love these confluences. A 618 off the high, a 100% off the low, typically is a big, big region of inflection. So you'll get clear-cut bias to the break above. As far as the resistance level coming into it, it might charge a nice pullback. So as it stands right now, I don't have any open positions on the Aus. Took a quick scalp on the release, nowhere near the entire range, but we are still holding a sterling position. We'll go over that in a moment as well. But the Aussie still looking pretty good. If you look at the daily chart, just to keep things in perspective, that longer dated, let me just snap these lines for you. That longer dated median line formation that we were in for essentially the better part of the last 2 years, that you see here in blue. Support, support, resistance, support, break. Here we are back above it. Key region 72, 71, 77 is going to be a longer dated. Critical resistance we'll be looking for here on the Aussie. As far as Aussie data is concerned, pretty much spent for the remainder of the week. Remember, as far as all the dollar crosses, we still do get Fed minutes on Wednesday, not expecting much. We got the quarterly projections, we got the presser, and then Yellen just the following week after the FOMC policy meeting. was up on stage giving a lecture. So it's unlikely we'll see that move much, but keep in mind on all the dollar crosses, there is that event risk coming up. So any questions on the Aussie? Here's what it looks like on the 5-minute. So you're sort of still holding the initial opening range for Europe, which is something I was looking at earlier today. I'm not too sure I'd be interested in a downside break just because of that confluence support region right there. It's too close. It's only giving you about a 25 pip move. I know the quarterly is 25 as well, but the stop would need to be up against this region. So it's pretty tight if you take it on the break. We'll be looking to see if the U.S. opening range gives us much. But last night's Asia Pac opening range gave us a lot of setups. In fact, the sterling position that we're holding from the scalp side of things was based on a simple Asia opening range break. It's the only thing I was looking at. I wasn't even paying attention too much to the momentum indicators. So keep this range in view. Again, near-term bullish invalidation right around that 70.88, 70.90 level. All right, next up on tap was the Aussie Yen, which was another one that we could diversify away from the dollar but still play the Aussie move from last night. Here's what the Aussie Yen looks like. Or here's what it looked like last night, and here's what it looks like now. Okay, so another one that we've been following for a couple of weeks now, and if you remember, we talked about this briefly yesterday in the webinar, this slope that we're working with off the low from last week actually is an exact replica of the operative larger scale scope that we were working with. So let me show you that real quick. So this is the scale that we presented last week. You saw NFPs charge a major break below that, but then we quickly rebound to close the day right at the median line. If you just mirror that same slope, you can see it's almost identical. Okay, so at this point, we're still holding above the median line right off the lows. We just missed the topside objective above the break, 85.70. Next target was 86 that we noted on yesterday's piece. It was 86.04 into 86.13. And the failure to do so with momentum breaking down so quick does risk a pullback. Look, at the end of the day, we are looking for a short on Aussie Yen, but in the meantime, this is sort of the ideal area I'd like to get into. So if we break near term, this is your immediate shift of focus for the bias. If we break below the median line, we break below the lows from Europe, look for a broader decline to the downside. 85 would be a soft target. 84.60 is what we would like to reserve at this point as our bullish invalidation level, and that's simply the weekly open. All right, so if we make it back below the weekly open, back below the median line, that would confirm the reversal of trend. The immediate focus to the downside would shift if we break below this confluence support right here. Remember, this is a nice clean 100% extension off the low. So if this is just correctionary, we shouldn't see too much progress beyond that. The major resistance that you're looking up here is a confluence of the September open, which you see there in pink. And this is the September high day close. And that gives you a range of 86.04 into 86.13. So ideal area, I think we'd be looking for a little bit more of a rigid resistance hold for Aussie Yen. It's tough because the yen pairs have sort of been lockstep and stuck in this sideways consolidation move. So until they make a move, you might not see too much yen-driven action. That's why this is another pair that you'd like to see on an exhaustion high into the Aussie. Might be a nice rally or a sell-off rather to the downside. Mark saying, question about the pound. There's a 618 on the daily at 50.85. That might attract before going to 53, in my humble opinion. So if you saw the chart, let me backtrack for just a moment. We'll jump into the sterling in just a moment, Mark, but I agree with you. If you saw the chart from a couple of days ago on the radar charts, 50.85, that region is a highlighted region of support because it also confluences with the median line off the highs. So I was looking for that drop too, but it's the pound, man. It's notorious for coming just shy of support, the throw over, which means, breaks right through resistance, then comes right back and reverses. So I don't think we'll get it. And I think from Jamie's opinion, he just, the conditions are changing where you want to be near term on the long side. So we'll see how that pans out. We'll take a look at that in a moment. Any questions on Aussie Yen before we move off? Mark saying, ha ha ha, so right. It's that censored pound, right? I know the explicit that you want to use. Yes, I hear you. I mean, it's just the nature of the beast, I guess. The one adjustment I do want to make to this chart, guys, is we're just going to want to bring up that retracement to the most recent highs. The levels are not really levels that are in focus for us because they're way off to the downside at this point, but we do want to keep them in view. So nice moves for the Aussie Yen, rather. It took out another two top targets to the upside. We'll see if this median line holds into the open. If it does, look for that break back above 85.70 to give us the region that we were looking for, which is namely just above the 86 handle. Also within this region, guys, of the September open and the September high day close is a longer dated median line I want to show you that dates all the way back to earlier this year. And it's basically the same slope that we were looking at on the daily chart for the Aussie Yen right here. So that slope has been in work for a couple of months now, and it coincides right with that region basically through today. Not to mention just the basic operative slope resistance. So we'll be looking, see if we can get that tag of resistance or if we break below this. Either way, looking for a possible move to the downside after a high here. All right, last but not least from yesterday's radar charts, before we jump into the scalp, was dollar CAD. There wasn't really much to talk about here as far as the near-term chart was concerned. I just wanted to highlight that it's right on track, guys. I mean, this thing has kind of been textbook as far as the rejection of major key resistance up at that 34.61 level. We just tagged right ahead of it. I think 34.58 was the high. You had the median line there. You had the trend line resistance off the yearly highs for 2015. You had a long dated 618 off the 2001 highs. Really nice reaction, right? Really nice reaction. So you could see this push give us a little bit more of a rally. And that's kind of what I tried to warn here. But the basic resistance and the bearish invalidation level remains near term. We brought it down to 31.81. Okay, and that's the 618 retracement of the advance off the lows. But more importantly, it coincides very nicely with the current operative slope here off the highs. We don't have too many tags of this yet, so I can't verify that this is the operative slope in play. If it is, though, this is sort of where a near-term recovery should max out at most. It's also the high day close that you made for the initial August opening range here. So there's a key region that you'd look to invalidate the short side. That being said, downside targets are still 130.11, which is just the stretch lows from September. And then you have 29.48, which is not only the stretch low from August, but also a basic 38.2 off the June advance. So here's what it looks like on the intraday chart. Again, it's been pretty ugly. Let me just zoom this out real quick for you. Okay, so again, there's that speculative slope that we're looking on the daily chart, and that gives you, again, 31.80 or so. Near-term resistance just ahead of that, you have 31.43. You have the September open again here at 31.38, near-term resistance. That was the support structure that we opened the week on. Here's the open of the week. We rebounded right off that. The break led to the drop into 30.61, or 63 rather. The target was 30.62. Make sure you're putting all your scalp targets on the inside, by the way, guys. It's paid off for me, at least, over the last couple of days. So look for this resistance near term. This is kind of the immediate bearish invalidation level. We'll be looking for short triggers into this region. Downside break, you're looking at 30.60 as your first target. Again, the 130 handle is an 88.6, which caught the exact low that you made there on the September open. and then a longer day, 29.50. That would be a 38.2 retracement off the lows. On a pair like dollar CAD, guys, where it's just a full-on breakdown like this, you don't really, what's the word? I'd rather not play the rebounds to the upside. Okay, we always talk about the possibility. It's a very nimble strategy in that, yeah, you know, I could play a break of this support into this. I could play a rebound from here into the resistance. As long as you know the broader structure we're trading in, you have a lot of options, a lot of opportunities to take counter trend trades and trend trades. On a trade like this where it's a full-on breakdown, I'm really not interested in playing the rebounds. Okay, I'm really just looking for the opportunities to get back on the short side. So keep an eye out for some short triggers here on dollar CAD as we head into today, tomorrow. Remember, as far as dollar CAD is concerned, you also still have the Aussie employment report, or the CAD, excuse me, employment report, which comes out on Friday. It's their version of the NFPs. So might charge some volatility here for the loonie. Here's what it looks like on the 5-minute chart. Just a quick look. You're seeing some pretty nice divergence along these highs. Not a reason in and of itself to take the position. Price action making a higher high, the oscillator making a lower high. I always say this, guys, and it's something just to take with a grain of salt, but divergent signals that are above 70, sub 30 on the extremes typically are your weakest signals. In fact, it turns out that the closer the divergent signals are to 50, the stronger they become. So just a word of caution there, not to take too much emphasis on that, but there is also a support trigger we'll keep in mind there. But as you can see, not much opportunity for entry here on the loonie. So another one to keep on the radar for now. Looking for resistance to sell here in dollar CAD. Any questions on the loonie before we move on? All right, so let's jump into the sterling. Here's what British pound looks like, first of all, on the daily, and you're absolutely right, Mark. I was looking at that level too, 50.85. I have it at 50.88. It's the 618 retracement of the entire 2015 range. Now, to start off the month, there was a really sweet confluence with the primary sort of objective meaning line formation off the yearly highs. Okay, so that was sort of the sweet spot of where I was really looking for a little bit more of a substantiated rebound. If we look back, it's actually the May opening range and swing low. So in and of itself, it's been a nice pivot in price. You have the median line there. It's a 618 retracement. It would have been nice to get a tag of that region, right? But again, it's the pound. Expect the unexpected. So we're seeing some strength off the lows. Momentum is making its way back above 50 here. Here's what it looks like on the intraday. So yesterday's Asia opening range was super tight. Okay, here's like the Asia open. You made a rally, you came back, you tested support, and then this thing just gunned right through the Asia opening range high. So that was sort of the initial, what do I want to say, trigger to put us on the long side. Let me just show you the actual, was it on this account? Yes. So again, here's the Sydney Open in light turquoise. Here's the Tokyo Open in dark blue. So if we just drop some markers here, here's your opening range. Whoop. Here's your opening range high for Tokyo. Here's the opening range low for Sydney. Okay, so you have opening range high, opening range low. It's a few hours into trade. I was watching this carefully, and specifically when you see it, try to break the opening range low, failure, and then swing right back up. The swing to the upside was accompanied by a trigger and momentum after, and here's the important part, a sweet hold at 40 in momentum. So right off the lows, this thing came back, tried to break 40, it held. 50 break. tried to break 40, it held, 50 break, went above 60, so now you're looking for a topside break. 40 holds on momentum, trigger, opening range break. There's all the hallmarks of a near-term trigger to the upside. Now, I would have liked for the market to give us a little bit more of a substantiated run. I was expecting to wake up and see the target hit already, but it hasn't been. A little bit lackluster because the dollar hasn't really been able to turn over as effectively as you'd think it would at these highs. Long story short, nothing here has necessarily changed our opinion on what's going on. You are getting some divergence in price. If the opening range for the U.S. session does inevitably break to the downside, I'll be quick to bring my stop in to break even and just let it, look for another entry on the downside. For those of you who are in the swing side of things, you're targeting up into 153.20. For my purposes on the scalp, since we only had literally a 16 pip stop on this, first entry or first target is 51.86. And again, that is the weekly open. Beyond that, the median line, so that's going to be determinant on time, but that's basically just above the 52 handle, 52.15. More importantly, a basic 236 off the highs from September takes into 52.36. So we'll see how this pans out to open up the week here, but even from the momentum signature, break above 60, you got a little dribble sub 40 here, but the last tag on the downside, even on the 30-minute, seeing a nice reversal ahead of 40, 50, 50 support. You just want to see this thing give us a little bit more of a topside stretch. Mark, are you in the room? Mark McDowell? You asked on Twitter yesterday if I was in the sterling position. I literally got into this position about 30 minutes after we spoke on that trigger. So we'll see if this gives us a little bit more of a stretch to the upside here for the pound. Any questions on the sterling? Mark, does that answer your question? Does that kind of give you a little bit of a picture of what I'm looking at? And look, the broader picture still remains way to the downside for the pound. This is just a recovery play. I'm not looking, let me just say this, the bearish invalidation level, because obviously we're seeing some bearish slopes here. The bearish invalidation level for me is up into 53.40. That's the monthly open for September. It's going to necessitate a break of this formation, which has defined so many pivots in the pound over the years. And it would take us back above the upward slope that we broke last month. So I think if you get into that region, that actually might look like a little bit better of a short position for me. Sterling also has a 100% extension at the 59 handle. At the 59 handle, Mark? That doesn't make any sense, man. I think you might have a typo there. At the 50, okay, that makes much more sense. I hear you. Yeah, I hear you. That would take you right into the 50 handle. Makes sense. Yep. I thought there was something at the 50 handle. Oh, this shifted. I'm sorry. This is supposed to be right there, just shy of the 50 handle. Why isn't this labeled? So this is supposed to be the low day close for the January opening range for the year. It comes in at 49.88, 49.89, 49.90, let's call it. It's another key region of support right down there. So yeah, as far as timing is concerned, you're looking at like deeper into the month, early next week for that target. But in the meantime, we're looking to see if we can get this rebound taking us a little bit higher here in the sterling. Guys, do you have any other questions on the pound before we move on? Mark says, oh, okay, interesting. Thank you. Hey, more than welcome, Mark. My pleasure, my man. Always like the conversation here. As a quick reminder for all the guys who are newer to the room, at any point during the webinar, you can always take a picture of the charts that you see presented by clicking on the camera button in the top right-hand corner of your screen. So if you need to refer to these charts later on throughout the day, if you're scalping or if you're intraday trading, you can always have them at your fingertips. So a lot of times I get questions on Twitter asking if I can send over a chart that we were speaking about in the webinar. You guys can take those pictures whenever you like. So I'll be more than happy to send them to you, but you can have them on demand. Just feel free to take that snapshot. All right, so let's jump into yesterday's quick update. And then I want to take as many questions as I can from you. See some interesting pairs coming up here. Bernard wants to look at the DAX for sure. Okay, first things first, and that was the Kiwi dollar. Very frustrating for me. Haven't gotten any entries. Still looking for some. The possibility here for a breakdown very likely if we get below 64.60, 64.53. That's the near-term bullish invalidation level. It's been a very clean setup. It's been following this slope off of the lows from September like clockwork. That's the median line of that slope. That also coincides with a 100% extension off the low and a basic 236 of the advance. So either way you look at it, nice little pivot in price here for the Kiwi. This upward slope, which is embedded, could be breaking at this point, which is why I still want to see if we're going to find support there. Keep in mind that the weekly open comes in right in that region as well. But if we mirror this slope, you can see that you got a little bit more room. Sliding parallel gives it a little bit more room before you want to validate that break. I'm not going to want to play this tight region, but certainly it would be a nice play with just a simple break of not only the London opening range low, but also the US range lows from yesterday. So could be a decent play actually if we break down from here for a run to 64.53. Broader story still remains constructive above this region for now. If this breaks heading into US trade, you'd risk basically a decline that could get as deep as like 63.50. 63.80 is where I'd start to look for support, but this is going to be the invalidation level for the broader upside trade. This is the basic median line support off the lows, basic trend line resistance that we broke, 3 tags, and that's just below that one at 63.50 level. So long story short, looking for a pullback to get back on the long side while above 64.53. If that gives way, we'd be looking to possibly sell rallies down towards the support structure confluence right under 63.40. Kiwi made a nice stretch. I don't want to underestimate that. We made a nice stretch. On the weekly basis, I want to show you that bar that we made yesterday, a couple of weeks ago, right into the lows here, into the, what is that, the close of September. Really convincing, right? Nice reversal bar. So broadly looking higher, near-term support not far from where we are now. Resistance break really looks for a tag of the upper median line parallel, and that takes you much higher in the Kiwi. Confluence 65.56. And then up into 66 handle will be the next primary objective. Actually, let me bring this in. Sorry, guys. Let me just adjust this 1 second. 78.6. We'll bring that into 764. A little bit better of a confluence region right here. And that is the Kiwi dollar. RBNZ is on tap next week, so you don't really have much to do with the Kiwi as far as event risk outside of the dollar event risk that you're heading into. So just keep that in mind. All right, moving right along. The other one presented in yesterday's piece was, I think, the favorite one out of all the ones that we've talked about so far outside the Aussie was EuroCAD. Nice way to play some CAD defensive plays here again outside the dollar. And with the euro kind of lackluster, it's really CAD that's moving this pair at this point. Here's euro CAD on the daily. And then we'll jump into the 30-minute in just a moment. The only thing I wanted to note is, remember, last night we were talking about 49.50. That's a 38.2, the advance, the swing lows from September. And the risk, as you looked at the near-term chart for Aussie, what is that, for Euro CAD, the risk was that you were coming into the median line here and you were just sitting on it. Okay, here's what we looked like yesterday. We had just come into it, a sliding parallel from the lows he made last week on that stretch on, was that Thursday, I guess? Caught the lows to the pip on the last 3 wicks here. So this was the region of which we wanted to look for a little bit more of a substantiated rebound. I was looking for this trigger to break here. So when it finally broke, or when we finally came into this region, obviously the break happened right after, before you hit that 45.90 level. So actually the trigger did happen. Topside objectives at 46.60, 47.30 have just hit. This is the near-term bearish invalidation level. So we still could get a stretch into this region. Keep in mind the weekly opening highs just shy of that. But ideally, this would be a nice area to jump back in on the short side. So we'll have to see if momentum holds 60 and you see a 47.30 hold. U.S. opening range breaks to the downside. Look to maintain that short bias on Euro CAD. But for the broader structure that you're looking at, it's a break any way you look at it. It's a break any way you look at it. And last week we were talking about this region specifically, the lower median line parallel off the lows, and a basic trendline support. We saw a quick break on that 29th of June, but other than that, we've seen so many tags of that support line. Both of those confluenced right here. And you can see on the 2nd of the month, heading into the close of last week, you saw a nice rebound right off that region, and then it crashed right through. And this is the kind of decline that you would expect of a confluence region like that. Sorry, guys, I'm getting tongue twisted today. Long story short, looking broadly lower in Euro CAD, the near-term focus is to play the rebound, looking to find short triggers a little bit higher up from where we are here. Whether it's a short trigger near 47.30 or whether it's 48.12, 48 handle, that's where I'd be looking for triggers on the south side here for Euro CAD. Keep in mind, a little bit bigger of an ATR with 44 pips as the quarter, so you want to stay nimble on this pair. Come on, pound. Let's see if we can get that press. Here's what Euro CAD looks like. This is a 1 minute. So pretty constructive momentum signature off the lows in price. A little bit more validity to it with a 3-point touch. So I'm going to stress that one a little bit more. And granted, and not granted, as price comes into resistance, that's when these triggers become operative. You know, a lot of times I get questions like, well, I saw a trigger to the south side and I saw it break, so I jumped in. It's got to be where price is, right? Price is always the determinant. Anything else is just a tool. The opening range, a tool to help us ascertain bias. Triggers and momentum, a tool to help us time our entries, right? So we just want to make sure that we're looking at things objectively. If the trade is at resistance, that's when we look for short triggers. If the trade is at support, that's when we look for long triggers. Okay? Valentina, great to see you in the room, says, so for EuroCAD, are you looking for a break of support? Which support structure are you talking about there, Valentina? This support? Down at like 48.50? Or, sorry, 45.80? Of the 46 handle. Inevitably, yeah. So if I go back to the daily chart, inevitably, yeah, I think the trade has more legs to the downside. If this is just a simple correction, let's just put things sort of objective. If this is just a simple correction, 100 off the low still takes you into like 41.90. Or 100 off the high, rather, still takes you into like 41.90, way down here. But that's not my style of trading, right? I leave that to Jamie. For me, it's the near-term outlook that matters. So yeah, this rebound could get a little bit more upside, sure, but I'd inevitably be looking for a break of that 45. Um, you're calling it 46. I would still call it 45.90. This 618 is actually interesting. That just popped up at 45.60 as well. Valentina, does that make sense? Why am I looking for that? Right? We gotta always. There needs to be a reason, right? I'm not giving you guys just what I think is gonna happen based on my mood for the day, right? There's a change here, and there's a change that we want to take note of, and we always talk about change in the momentum profile, as it were. And this is a market change I'm paying attention to. Guys, do you realize this is the first time we've broken 50 in Euro CAD to the downside since February of this year? It's the first time we've broken 50 to the downside, right? We came back above 50 back in April. Every attempt, hold at 50. Couldn't even get into 50. That's one marker I'm looking at, right? One other marker is look at this. After we came off overbought conditions, where we start finding resistance and momentum? 60, 60, ahead of 60, and now the 50 break for the first time in, um, since February. Let's see what happened the first time we broke 50 from overbought conditions. Coming from overbought conditions into 50, well, the last time we saw that was right here. Look where price was. Looks familiar. Looks rather familiar, right? Now, I'm not saying it's going to be an overall drop and the whole thing is going to turn, but it tells you that the medium term outlook, it's changing, right? There's something happening here in momentum. Price is following along. For me, I'm looking at this trigger. So this is the trigger off the yearly lows. If we break this, and certainly if we make it below that 45.60 level, I think there's plenty of downside to go here. Valentina, you're in the right place. She said, I need to understand better your theory. You're in the right place. So I want to encourage you guys, ask as many questions as you want. These webinars are for your benefit, and I want to make sure you guys are getting the most out of it. So feel free. But does that give you a little bit better of a picture, Valentina, of where we sort of ascertain why we're looking for a specific reason? Nothing is left to what we think. Everything's grounded in some sort of quantifiable metric. But good question. Hey, Valentina says, thanks. You're more than welcome. My pleasure. Graham had a question right after. He said, hi, Michael, EuroCAD 5-minute, please. Not Sterling CAD. Oh, wow. That was the Sterling CAD I was looking at. I keep doing that with you guys. I'm sorry. Too many charts open. I suspect it'll look very, very similar in that the 5-minute. Okay. Graham, thanks for pointing that out, man. I appreciate it. He says maybe the same story. It's similar, but it's not actually exactly the same. Looks like you just caught a trigger break here and it's testing it as resistance. You had some divergence into the highs. Remember, when you're looking at divergence, it's not necessary or it's not a necessity that the momentum make a lower high. Even if momentum holds equal highs, but price action makes a new high, that's divergence. Remember, all you're looking for is for the oscillator to not show an extreme in price or to not reflect an extreme in price. And by extreme in price, I just mean a new high or a new low. So here's one rebound. You pushed into a new high. The momentum indicator did not. That's divergence. And typically when you see a divergent signal into a trigger break, 9 times out of 10, I will take those trades. Now, again, we've kind of missed this one a little bit, so I don't want to start chasing. 713. Yeah, actually looks like it might be setting up nicely. Let's see what the U.S. opening looks like. If the U.S. Open plows through resistance, I don't want no part of it. Um, but now that we're sort of showing a little bit rebound off this region, yeah, that might actually be a decent trigger. Not bad. Any questions on Euro CAD? Sorry about that with the Sterling CAD mix-up. He says, thanks, and I thought maybe divergence was weak. And though divergence may be weak, it's a stronger signal than the other one that we looked at on what was that, Sterling CAD? It's stronger than this one, although that's not the one that we were looking at with divergence, but you get the picture. I'm not sure which pair it was. Oh, it's stronger than this one. And I'll tell you why on dollar CAD, because both of the divergent signals are in overbought territory. I tend not to trust them as much. Don't get me wrong, they might pan out, but from my experience, I've just been stung a couple of times trying to take a trade off that kind of divergence. So just keep that in mind. I would say that's a little bit more compelling here because both signals were well below the overbought territory. Make sense? He says, "Yep, many thanks. You're more than welcome, my friend. More than welcome. Thanks for pointing out that trigger. Actually, see if we can get a rebound here again in U.S. trade to get back in. The stop would be against the swing highs would be the primary stop that you'd want to put against. I'd like to see if I can get a stop against the highs for the week, the opening range high, and with a 44 pip target, I want to see if I can get that as close as I can." Question from John. John, great to see you in the room, sir. Says, is there a session open, high, low data on your 5-minute chart? Is it available on the FXCM App Store? Yes, it is. It's called Trade Sessions. Not sure if it's on the App Store, if it's on fxcodebase.com. It's a really cool tool, guys, because it just helps you quickly just know the highs and lows for every session. It's not going to give you the opening range highs and lows. Those you got to mark yourself. So as the market pushes a new high, so does that shaded region move up. But finding a quick where the open for the market was really quick, and also the opening range as you break it. So as the opening range starts to pan out, I'll just drop a vertical line on the highs and lows, and we'll see how it pans out. But here it is, my friend. John, there's the link. I just sent it in the box, guys, so all of you should see that for the Trade Session app. Yeah, you're more than welcome, sir. My pleasure. All right, Chintan, great to see you. Says, good morning, Mike. Can you look at Aussie Kiwi if you haven't gone through it yet? Thanks, sure can. So the Aussie Key is frustrating the heck out of me because it's just sitting here doing nothing after a major level. So here's what the daily looks like. Oh, well, it's finally making a move this morning. I did not look at this. Okay, so we talked about this, was it in yesterday's webinar? We were looking for this major break below this region. So again, I don't want to bore you guys. If you've been in the webinar for the last couple of months, you've heard this slope like a million times out of me, but it's really ridiculous how we continue to respect that same slope off the February, or this is January 2014 lows. That's the operative slope that we worked with all of these corrections, and that's also the current slope that we just broke to open up the month. We're testing it as resistance. The rebound we made yesterday came off of the median line right off the highs, and you'd expect to see this upside give you a little bit more of a bounce. But if this break is going to be legit, you should be looking for resistance right around here. Here's what Aussie Kiwi looks like on the 30. Okay, even from a near-term approach, I have us coming into some resistance. Last night's RBA interest rate decision charged a nice rally. Kiwi's coming off a little bit. That's exacerbating the effect, right? but I should be looking for some resistance right here. So this is a basic 236 off the high. It gives you 109.80. And a basic trendline resistance off the swing highs from Friday of the 25th of September. So if we make it through here in U.S. trade session, I'd be looking to buy pullbacks. I think that would give us a little bit more of a substantiated break or move to the upside towards 110 even, 110.50 rather. That's the monthly open for September and the range highs for last week. But I'm looking for some resistance near this region where we are right now. Again, the daily chart shows that same slope that we pivoted off of, what, like a million times. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Checking it as resistance. Does that make sense, Chintan? From a trading perspective, this thing could give us a little bit more of a range-bound action over the next day or so, just because of the relative performance that we're seeing. He says, yes, thank you, and more than welcome. Before we leave Aussie Key, let's see what the 5-minute looks like on that as well. Yeah, so the momentum signature still looks kind of constructive. Here was one trigger. Here was another one. Those are support triggers I'd watch. So I'm going to clean this up and get rid of these for now, but you get the picture. What we would need to see before we start getting too aggressive trying to fight the current upside slope. And that is Aussie Kiwi. Okay, the question here says, just wanted to comment on Euro Oz. That 56.60 was so obvious, strong support. I should have had a long waiting there. Euro Oz, I haven't actually looked at it this morning. Let's see. And Aussie Kiwi wants to press through that, huh? Remember, just to put things in perspective, that whole notion of things in overbought conditions should be sold. You want to be very careful with that. In fact, when something breaks into overbought condition, that's when it has the most power, the most thrust behind it. It's the recovery sub 70 that's your sell signal. And even that, you'd be better off to see something like this where it's a break sub 70, the high gives you some divergence. That's a much more compelling short. So let's look for those triggers as we move into the U.S. trade session, but that's what I'd be looking for on Aussie Kiwi. Your question on Euro Oz. I had a level there at 50. What are you talking about now? You're saying 56.60s. Yeah, I had a level at 56.69. I'm not sure what that is. I think it's just a swing low and a nice pivot right here. 56.50 is actually an exact 100% off the high. Yeah, that was a decent scalp just based on, I mean, you had a 30 break to the upside, and if we look at the intraday, I'm pretty sure you'll have a compelling. Yeah, this was actually a really nice trigger. Well, that was yesterday's London session, but this was a nice trigger here. You had some, check this out, guys. So you have a pullback, hold at 16 momentum on the last two spikes, a break sub 40, okay? It dropped, gave you a recovery. I still wouldn't be taking it. This is the trigger now forming. And check this out. On that last drop, divergence in price, divergence in momentum, and then a topside trigger break. 9 times out of 10, I'll take those. I'll take those. That would have been a nice play to the upside. That's just in the confines of last night's London trade session. Here you had ongoing divergence and another trigger that would have panned out beautifully. New low, new low, new low, new low, higher low, trigger break. Let me just snap these lines for you real quick. Okay, so this slope we'll have to get rid of at this point. Yeah, I mean, I'd be looking lower near term. You might get a pop up back into the U.S. trade open, but I really wouldn't be looking to fight this too hard, Mark. For me, the long scalp you're talking about definitely was a great entry. The hallmarks were there even on a trigger, but we would have been well out of that trade already. 60 pips off the low. You made much more than a 60 pip rally at this point. So I wouldn't really be looking to play the long side any longer from here. In fact, if you break back below that 57.38, 57.40 level we're testing now, you'll probably see this thing resumption. Because if you keep in mind, the momentum signature from the start of the week is pretty bearish. You got a divergence into a trigger break. Cool. How high that takes us, I don't suspect too much. The invalidation level near term would be right at 58.60, in my opinion. Nice pivot in price. It's going to be a necessitated break back about the median line parallel, and that's the opening range low for the initial opening range low for the week at least. Does that make sense, Mark? He says for sure, especially if you don't think that euro dollar is going to break the upside. So we'll go over euro in a moment. I know Bernard's been waiting. I feel bad. I want to go over his pairs first, or at least the DAX and some of the risk assets. The euro. Look, again, you're consolidating into the apex of this thing. It's going to give us something at some point soon. I'm sure of it. In the meantime, look at the momentum. I mean, I just don't have any, there's no conviction, in my humble opinion, again, about a near-term bias to play this intraday yet. I think you see some more chop until you finally get the move, but there's not too much to get excited about on euro dollar. For Bernard, my man, let's take a look at the DAX. German 30. Here we go. So, Mr. Bernard, I have a basic trendline resistance off of last month's high, right in view. Right about where we are right now. This was also the opening range low for September trade we're testing. But it got kind of messy on the DAX. If you remember, Bernard, we were talking about this, I think last month or the month before, and it was really, really clean. We've now made a secondary break late last month below that median line and broken back above it. So I'm hard pressed to actually work with that as an operative feature at this point. Let's do this. See if I can rework some of these levels for you. That's spent. We'll keep that still operative. 764. That's spent. Don't need that. Okay. Bear with me one sec, guys. Just going to go on the fly here for Bernard. Let's clean this up a little bit. Don't need that. 786. Don't need that. 50. Don't need that. So basic 236 lines up all kind of with that high from December. I'm keeping this light because I'm not really sure this is going to be an operative retracement we're going to want to really stress at this point yet. You got some divergence into the lows. Long story short, Bernard, it's looking like this can make a recovery. Just because of the divergence signal that you got into a trigger break. Here's a trigger break. I'm not sure why it's not on here. Well, that's off the highs from July. Just off of the June highs. There was another one that broke. And that's after a divergence signal. So you're testing resistance right now. If this gets higher, I'd be looking for a run into like 1030. Last month's open was right here at 239. And just for argument's sake, if it is more of a constructive path on the near term, which it looks like that just caught the lows there, right? You'd be looking for an operative move into like here. This is the low day close. Let's just highlight that, low day close. And one other thing I want to highlight is the monthly open. No, it's a messy chart, Bernard, but those are the levels I would be looking at. We can pull this into a 4-hour to make this a little bit cleaner. But near term, that's what I'd be looking at. I hope it's not too confusing. Does that help, Bernard? He says, thank you. Very helpful as every day. I appreciate that, my man. It's an interesting setup. You always get me interested looking at this DAX picture. More focused on the equity markets in the U.S., the S&P, the Dow, but this is looks very interesting. Long story short, you're at resistance. You're checking resistance. In fact, Bernard, on the 4-hour chart, momentum is testing 60 as price is testing that resistance barrier. Even more of a tell would be a 60 break on the upside momentum and a push through this region. That said, you're at resistance. All right, my man. Interesting. Very interesting. So feel free to take a snapshot there if you need that for future reference. Craig, great to see you. Says possible trigger break right now on the Kiwi to the upside on the 5 minutes. Kiwi to the upside on the 5 minutes. Gosh darn it. Yes, it was. It is. You know, the amount of trades I give up to do these webinars with you guys. I'm just playing. But yeah, I mean that was the upside trigger. And there's the US Open. You hear the bell. Divergence. The reason it would have been operative is divergence to a trigger break. Now you're just looking for a push through the US opening range high. Make sure you have your stops against the lows there, okay? If you do get involved in this trade on the 30-minute, nice 4-touch trigger touch there, hasn't give out as well. So be prudent as we get into the US trade session. If it starts to fail near the opening range high and it starts to track back, essentially a break of the lows and you're out of this thing, okay? I wouldn't try to press it. It's been a pretty exhaustion move to the lower throughout course of Europe and Asia Pac, so keep that in mind. All right. Dairy auction coming up too. Thanks for the reminder there. Valentina says, in your updates, shall we look only for bounces when you write a break? Shall not we trade that? I think you're asking, so you want to use the rebounds instead of playing the breaks, it's always going to be in your benefit, Valentina, to play, if your bias is to the downside, to play a rebound off resistance. If your bias is to the upside, to play a rebound off of support. It's always going to be the better play because it's going to offer you a better risk to reward ratio. Does that make sense? Look, on a trade like this, let's say, what's the high? 90, the low is 80. You're looking at basically 10 pips. 64.90, 64.80, yeah. You're looking at basically 10 pips. If this holds into the US opening range, which by the way extends into 10:30, you're looking at the first hour, 45 minutes of trade. Don't stress time, stress what price action's doing. So we've made a high, we've made a low. I want to see it test one of these highs and one of these lows into 9:30, 10 o'clock. If we break a high like this, sure, you can try to take a long here against the low. It's only 10 pips away. Throw it a couple of pips lower, 13 pips. You're looking for 22 pips, 21 pips, sure. But on a trade, on any other basis, I'd rather, if I'm bullish, look for a drop into support and then play that because I'll have a better stop to trade against. Does that make sense? So even on a move like this late last week, we came into channel support. We're looking for long triggers. In fact, we came below channel support. On this rebound here, we bounced off of the slider. And if you had a 5-minute trigger give out here, a stop against the lows, that's going to give you a much better risk to reward ratio. If I'm bearish, it's always going to be more beneficial to sell off of resistance. So wait for a rebound to resistance, see if the opening range gives you a nice crack, and then you take the short trade. Does that make sense, Valentina? It takes a little bit of practice to get into. Eileen says, glad for the extra eyes of all to catch breaks during the class. Yeah, feel free to throw them at me, guys, because, again, I can only have so many charts I can track at the same time. Sterling's breaking higher, so that one looks pretty decent as well. That's pretty much an opening. Let me just go back to that real quick. We'll wrap things up. So that pretty much just took out the London high with that break there. Okay, so first target here we're at right now, 51.86. So I'll shave off a quarter of the trade here. Let's see if we can get that stretch. And this is how you want to approach the trade, guys. I know I'm over on time, but just bear with me as we navigate through this one. This is how you want to approach the trade. Always be nimble with your analysis. 618 comes in at 52, 51.99. So now that we've gone right through the initial target, 51.86 was the open for the week. We talked about that. Now that we blasted through that, I don't want to just close the trade for the sake of closing the trade. 52 is the 618. I'll take half off here. I'll bring my stop to break even, and I'll leave the rest looking for that rally towards 52.38. All right, managing your risk is always going to be paramount, guys. Always, always, always. All right, going to wrap it up here. And then your cautions to wait for the opening range of the US and for other triggers. Right, guys, remember, we have all these tools at our disposal. We want to wait up to as many of those line up as possible to jump into a trade. So we have that conviction, right? John, I didn't look at Sterling Kiwi for you. I'll take a quick look at that. I don't think I have anything updated per se. Yeah, I'm not really interested in Sterling Kiwi because at this point I'm on a Sterling long, and Kiwi hasn't given us the break yet, right? In fact, Kiwi looks like it might hold that channel support. So I'm not sure over the next 24, 48 hours you'll get too much play on this. Typically a massive range ATR. So I only like to play Sterling Kiwi when I have a clear-cut definitive directional bias. Right now all I can tell you is that you're coming into support, but I don't want to be the one trying to fight this trend. We've seen some serious weakness off the early highs. This is the first area of support I'd be looking for. We're there right now. You have a median line structure or just a basic trend line structure that dates back to the lows in 2013. Nice pivot. You're there now. You have a longer term structure here in blue. Geez, that's off like the 2011 lows, former upper median line parallel, now support, and then you have the lows for August. So the medium term, you're looking for a rebound off this region. I'd be looking to sell that rebound. in sterling key. Even on the near term, you're holding a very nice descending channel formation. In fact, let me just do this for you. A basic retracement off this should probably serve you pretty well if we're going to see a rebound off this level. Something like this, John, right? And that gives us, well, first of all, this is going to be a major region of resistance. And for me, that's going to be the near-term bearish invalidation level. But ahead of that, depending on where we come in time, the 236 comes in at 35.67. All right, so John, hope that helps, man. Give you a quick look at sterling Kiwi. We'll take a deeper look tomorrow. He says possible sterling Kiwi short at 234.90. 234.90. So you're looking for this swing low? Could be. Could be. I would look for the weekly open. What's the open? The open is 235.10. Yep. I'd be looking there. The weekly opens have been offering some nice pivots just to give yourself a little bit of a room. So I hope that helps. Near term, I could see a pop higher. Watch 60 too. We haven't broken 60, geez, since Tuesday of last week. So if you see this break to the upside, expect some recovery. 235.10, 235.67 would be areas of interest for resistance. All right, hope that helps, John. All right, guys, we'll wrap it up there. It says definitely helped. Thanks. You're more than welcome. Great class, like always. See you tomorrow. Many thanks. I appreciate that as well. Guys, have a great day trading. Best of luck. Watch the yen pairs as you head into tonight. You have the Bank of Japan interest rate decision. Not really expecting much, but as you know, the comments can always stir up things on the yen crosses. We'll see you tomorrow morning, same time, same place. Cheers.